Well, everybody looking for this big jump in jobless claims. It isn't meant to be. We moved from a slightly revised 215,215 to the new number 211,211. So minus 4,000, and continuing claims moved from 1.733 to 1.722 million. So at least with the jobless claims number, many were thinking that this would be one of the front lines to see how the coronavirus is indeed metastasizing within the economy and its indirect effects not showing up, at least there. PPI for the month of February, Producer Price Index, a big drop, down 0.6, and that would make some sense. Down 0.6, and we strip out food and energy, it's down 0.3. These numbers are much bigger than we were expecting, and they follow unrevised big ups, up 0.5%, both headline and core for January. So we could see that something is affecting the pipeline, and many maybe are going to move to the notion of how the global effects of coronavirus may indeed be having a hand in this. Let's go through some of the year-over-year numbers. Year-over-year demand was up 1.3. That's definitely about 0.5% light. PPI ex food and energy year-over-year up 1.4. That's 0.3 light. So we see these numbers indeed retracing a bit, at least on the producer pipeline side. Dollar index is having a big day. Interest rates, you know, the long maturities are still struggling a bit, but they have come off some of their higher levels. Remember, we were flirting with 80 basis points yesterday. We filled in a gap left from Monday's session from 60 to 65 basis points. All these things were good consolidation if you were looking for rates to firm up a bit as a good sign. That seems to have diminished just a bit, but of course, we are a long way above the low ticks that we had, which were 24 basis points for a 2-year on Monday and 31 basis points for a 10-year on Monday on the intraday trade. Good to keep these things in perspective.